Hi everyone, today let's talk about the factors affecting the markets, then we'll talk the most recent IPO, as well as the economic data. Then we'll get into the charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. They say markets have ample reason to fall, but they are not. They're actually going higher. We have the war in the Middle East taking place currently. Talked about that in the Sunday video. It's also all over the news. We also have no speaker in the House, also generating some instability. And then we have bond yields finally going lower, driven by some less hawkish comments from some Fed officials. Based on what they said, it looks like we might be done hiking for this year, but we're still looking at a long period of time at current rates. And that did cool off yields at least a little bit. 10-year yield hit up to about 4.8%, then it pulled back recently, and we'll take a look at that on the charts later. And despite all of these negative headlines, we've seen a couple of good trading days, up about 3% over the last 3 days. Pretty good. And it does make sense that the recent rebound is coinciding with yields taking a little bit of a breather. Obviously, instability between Israel and Hamas is affecting oil prices, which is generally negative for the markets. But I think yields were just too bought up here. You can see the 2-year dropping down to 4.94 after being all the way up at 5.15%. Talked about 4.8 on the 10-year. Both of those cooling off pretty substantially. 10-year all the way down to 4.63. And then we talked about the Fed officials acknowledging how high bond yields have gone. And the higher bond yields are effectively cooling the markets on the behalf of the Fed, meaning that they might not have to hike again this year. You have Mary Daly, the Federal Reserve President from San Francisco, saying that financial conditions have tightened pretty substantially over the last 90 days, and that rates might remain at this same elevated rate for a long period of time, but that there may be less need to raise the federal funds rate going forward. Of course, next on the docket, we have PPI and CPI. And we'll take a look at that on the economic calendar. Those are coming up tomorrow and the next day, so we do have to pay attention to those. Inflation still playing a role. But right now, markets are shrugging off all of this instability in the short term. Moving over to Birkenstock, they IPO'd here today at $46, giving the company an $8.6 billion valuation. Seems a little bit high for a company that makes shoes. This is technically a luxury brand, and they expect it to attain a valuation in that $8 to $10 billion range, and it does seem like that's what they got. Based on these metrics versus other shoemakers, they do seem a little bit expensive. Steve Madden trading at 13 times, Birkenstock all the way up at 37 times, Crocs only at 7 times after the massive run that they've had. That's always a pretty impressive chart, worth a look. But right now they do look expensive, and it's probably a little bit of hype around that new stock, that fresh IPO smell, and we'll see if they can maintain that. ARM being another one of those IPOs. This is a chip designer. Also seems a little bit overvalued, but there was a lot of people like that stock, and banks that put out their favorable opinion on ARM. Again, IPO markets are typically pretty volatile in the early couple of weeks and worth watching, but generally not worth trading. Moving over to the calendar, 3-year note, 4.74, up from the previous still. Talked about the Fed officials speaking here today. Don't forget, PPI tomorrow morning at 8:30. That's the big one. In the afternoon, we still have FOMC minutes and the 10-year note auction. And then right after, on Thursday, we have CPI at 8:30. So the data keeps on coming. And then the Fed balance sheet, that's going to be interesting. And I want to see just how fast they are cutting now, with yields starting to go a little bit lower. Have they slowed down in their selling of bonds in order to prop up that market at least a little bit? Moving over to Max Pain for the Friday session. It has ticked up here slightly. We're up to 430. Quite a few more options entering the market here, almost up to 1 million options. It's a nice little step up of around 150,000 options from yesterday. You can see some put walls here now. Interesting. 425, 430, interesting levels. Max Pain right on that dot here. 435, decent amount of calls, but not nearly as much as the puts. This is probably for some hedging on the PPI and CPI numbers. If they bought them today, that means they don't have to pay nearly as much of a premium as they would have had to do if they bought them last week or even yesterday. So interesting to see that coming in here. Although it's still not giving us a ton of information on where we might end up, it does look a little bit more bullish in my opinion. Moving over to the charts, starting off with the hour and the daily on the SPY, continuing to trend upwards here pretty aggressively. You can see we got above 435.88. Next level to the upside for me, 439.98, basically at 440. Couldn't quite hold above that level here, so to the downside you have some trend support at 434. And then horizontal support down here at 431.71. Obviously still a bullish structure. Almost all the EMAs and SMAs are in line here. Looks okay. Zooming in here a little bit on the daily chart, you can see we got up to VWAP and the 21 EMA. We did close above it. That was sitting at 433.70, currently sitting at 434.50, so we're closed above it. We're above the shorter term trend, but we did get a little bit of a rejection just like we saw on the hourly chart. Really needs to hold in this zone and then rally up to that 55 EMA. That's what I'm looking for. Obviously, that'll be dependent on PPI, which is going to give us a little bit of a precursor to the CPI numbers. Momentum still looks very bullish, but you have to respect that rejection that we got from these previous lows. Critical level. So with that top, with the lower high, you got that midpoint here, touching that midpoint. And if this is going to maintain that downtrend line, we should reject from that period. So we continue to get a low, lower low, and then we get that high, lower high, and we continue that breakdown from this point if it's going to happen. Otherwise, we need to see that push through up to the highly traded zone in the 55 EMA, up around 444. Moving over to the NASDAQ, very similar thesis, continuing to stair step up here. Got a rejection from that 370 level. We knew that was going to be a big one. You can see that level marking that dip low from that lower high from the tops here in July. So you had a high, lower high setup with a midpoint, which marked that 370 level. In terms of levels currently, 367.63 to the downside, right at that 21 EMA, 370 here to the upside. Looking at that current structure, you can see we are looking to set up that lower high if it's going to happen. We got the 55 EMA sitting right at 368.63. That is basically where we stopped on the money. So watching that level really closely. We're also already at the highly traded zone, basically already at the price targets that we looked at on the SPY. We do have a trend line up here around 375.20 or so. You got a level here at 376.45 as well. That could be the price target if we do continue this bullish run. Certainly seems possible. Just like this run previously, we had 5 days of bullish momentum. We're currently sitting on 3 days, and it does seem like this can go back up into that zone around 376. But this initial test is going to be pretty important, just like it is currently on the SPY. Moving over to the Russell and the Dow. Russell stopping right on the money at this previous level. 175.96, got above that level, holding right there. Next level for me, 179.17. You also have this downtrend line going back to these previous highs at the beginning of September as well as September 15th here. And then you can see the very top back in July. If we get back into that zone, that would be right in line with that 179 level. It does seem like that's possible at this point. Looking at the Dow, similar thesis, up to 339.11. We're above all the short-term EMAs, but we're starting to see a little bit of a fade in momentum. Didn't quite get overbought conditions yet. You also have the 144 sitting up at 342. So this bullish run is probably still intact. The structure is definitely intact. So I wouldn't be too excited to short just yet, but we are starting to show some signs of exhaustion. Moving over to Apple and Tesla, both of these getting into critical levels on today's trading. Apple was actually down on the day about 0.33%. Got very close to that 55 EMA at 180.15. Couldn't hold above 178.58. Threw a wick to that upside and then broke down below that level. So we actually were above it yesterday and then we gapped below it. Tried to retest, couldn't hold, which is a pretty bearish signal. We got an inside candle, does not look great. Still watching that 55 EMA on the daily chart. If it's going to hold, it really needs to get above 178.58, hold that level, and then rally up to trend. Next level for me is 182.37, which could be an interesting level. And then I have 186.81 also at an interesting level. You can see that marking this gap back here, which did not quite fill on this previous run in August. So we do have a gap left there. But again, we're showing signs of exhaustion. Tesla, similarly getting up to trend, getting up to that level at 264.68. Tested that level, threw a wick, started to show signs of rejection. If it's going to hold, it needs to get above this level and push to the next one. Then you could at least get a double top. If it does break, then we could be in a more bullish structure. Right now, we have not generated a higher high yet. We had this previous high. Next was a lower high. We do have a low, higher low. So if this breaks here, we could see a change of structure, but it really needs to make that next push. And it is at a critical level going into the PPI report tomorrow. Moving over to staples and discretionary. Staples continuing this rally off of the 66.27 level. Got above the 21 EMA on the 4-hour chart. Bullish momentum. RSI not quite bullish, but definitely showing some structure. Might pull back, set up a higher low or a double bottom, and then rally out of this level. But this does seem to be the level that we are going to hold at this point. This move higher has been a bit stronger than we've seen over the past several months on staples. You can see it's just been a bloodbath all the way since the end of July on staples. And this is interesting here now. Discretionaries, big rally on the day, got above 162, held that level. Now we need to see a continuation up to the 144 EMA at 165.73 or 166.78. You also have the 200 sitting at 167.28. So all of these levels, super interesting. You want to see it hold here, rally up to the next one. That would be a nice move. I would expect to see some rejection from that area, even if we ultimately go higher. We have a double bottom, rally up, pull back slightly, higher low, continuation. That's what is most likely going to happen in my opinion. Moving over to breadth. 50-day average, still a bullish candle, but look at the length of that wick, clearly showing a little bit of exhaustion in the short term. We had 4 days in a row of bullishness on breadth, got all the way up to almost 32.22, just a little bit short of that level at these previous lows. It does seem like we're going to pull back at least a little bit. 200 SMA getting into a critical level as well, 43.55, as well as the 21 EMA sitting right at that level. We did end up technically closing above it, 42.74 versus 42.60. Bullish momentum, bullish RSI, not quite across the 50 line. 50-day average just short as well at 49.77. Overall, this is good, but definitely some signs of exhaustion in the short term. Moving over to the 2-year, like we saw on the article, we did get below 5%. Pretty interesting. That's a major level. Threw a wick to the upside and then broke down once again. We're still below it here. Momentum bearish, RSI bearish. Potentially setting up for a head and shoulders. Left shoulder, head, right shoulder maybe. Then we could get a bigger breakdown from a neckline right around that 493 area. Certainly possible. 10-year yield had that big bearish day on Monday, falling around 3.5%. Really didn't have a very bearish day today. But it didn't rally up like crazy either. Bearish momentum. RSI is still bullish, but it is below the SMA. Interesting. Really, if we're going to see a rally, we want to see this break down pretty substantially, back down to this 6.5 area in my opinion. Moving over to the dollar, this is absolutely what you want to see if we're expecting equities to go higher. We are continuing to grind lower. We have almost all the EMAs and SMAs in line here on the hourly chart, definitely showing some pretty significant weakness. Bearish momentum on the daily chart as well. That is 5 days in a row of bearish movement on the dollar. Wouldn't surprise me if we got at least a little bit of a bounce. Maybe retest the trend line up around 106.40. That could be interesting. Then break back down from that level. But we did close below the 21. You want to see it get below 105.50. That could be interesting. And then below that, we have quite a bit of room down to 104.40, as well as the 55 EMA sitting at 104.23. Moving over to the bonds. JNK, slightly bullish day, 0.02%, but momentum continuing to look bullish. Broke down a little bit from that level. 21 sitting at 90.38. If it's going to continue, you want to get to at least that level. This is just a singular bottom, so we could come down, higher low setup, or double bottom even. That would be interesting. Or maybe we just V recover all the way back up to 91. Also could happen. TLT, pretty much nothing on the day. Inside candle. Momentum continuing to tick towards bullish. And if we do expect yields to come down a little bit more, obviously TLT will rally a little bit. But this, of course, is still a waterfall sell-off. But if we get a little bit of a bounce, it would not surprise me if we did rally back up to that 92 area. Moving over to the volatility indices, MOVE Index rallied up, broke trend. Not exactly what you would want to see if you were a bull. VIX, on the other hand, continues to break down. Bearish candle, hit that 21 EMA, rallied a little bit off of that candle. Bearish momentum, RSI not quite there yet. Need to see that follow through at this midpoint. A close below that would be nice. if we're expecting equities to go higher. If it's going to hold, it really has to hold in this area around 615 on that trend line. Otherwise, we could spike down to the 55 EMA at 1572. Definitely an interesting area going into PPI. Really needs to hold this zone if it's going to do it. Otherwise, we could break back down into this previous consolidation around 1350, and that should give equities a little bit more room to the upside. Moving over to my accounts, you can see I ended up rolling these calls here on the IWM out to 175. Going out to 3 days from now, I did get $2 credit on that. So I got a little bit of room to the upside. Max profit for that would be up at 177. Currently sitting at 176 on those shares. But super bullish day, made $95 on that for the day, potentially sitting on about another $100 of profit there. And then for the Qs, I did roll out again up to 364 for $5 credit. Might look to roll that again depending on what we see on PPI, giving us a forecast of what CPI might look like. I do have some puts for tomorrow at 365. Again, you like to see it. $385 on the day. Qs up $2. Made $290 on this account. Again, with the Qs up only $200 on 100 shares, so everything's still looking pretty good. Traded in and out of a couple of positions, which helped on the profit side, despite these calls being really deep in the money already. Overall, everything is still a little bit bullish, but getting into some areas where there's a little bit of concern in my opinion. Let me know down in the comment section what you think of the current environment for the economy and for the markets. Which one matters more? Is it inflation, the Fed, or the conflict in the Middle East? Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.